Yo, what is up? So in today's video here, I'm going to be going through my top three favorite assets, which is gold, EURUSD, and the SPX 500. Basically, what I do is I look at the 4-hour chart mostly, and I mark up the most relevant key levels, and we look for potential high quality swing trade entries out of those key levels, okay? And it's not just for swing trading. You could also apply it to your day trading. If you're aware of where these key levels are, then you can trade your day trades into those levels or out of those levels to increase your probability as well. So always good to know where buyers or sellers may be waiting on these popular assets. Okay, so let's look at gold here first. Okay, and the first thing I see right off the bat is this level right here where price is currently sitting to open the week. So we have this supply zone where buyers were dominant, and as soon as we hit this price point of around 3360 ish, sellers stepped in and pushed price down quite a bit over the span of a week or so. Now we climbed right back up in that zone, and now we're waiting to see what happens there. Who's going to win? Is it going to be the sellers win again, or the buyers going to break through and dominate the sellers here? So what I first do, the very first thing is I'll go to the Edge Finder software data, and this is just software that takes all of the economic data that's currently relevant for the asset, and it will give it a bullish or a bearish score depending on economic reports. Okay, so if we look at gold, we can see that gold is a 4, which is considered neutral, but it's still more bullish than bearish. Okay, so that's something to be aware of. And this software, the Edge Finder, I'll leave it in the link in the description of the video in case you want to check it out for yourself. It's very useful when you're doing analysis for swing trades, so you can be on the right side of the economic conditions. Okay, so let's go back here and take a look at what I would do to play gold coming into the week. Now, it's super important when we come into situations like this where we just don't take a buy because we think buyers are just going to smash through this for a second time, on the second attempt, right? It's better to play the mentality where you say to yourself, if and then. So if price breaks through that level, pulls back a little bit, then I will enter the market. Okay, so that is how you react to the market rather than trying to predict it. So then I would go long if that was the case. All right. And for a swing trade on gold, I'm going to do like between a $20 and a $25 stop loss. And another way you can determine that, if you just go to the average true range indicator, if you want to do this on any asset to know, hey, what should I set my swing trade stop loss to be? Well, you can go to the daily chart and you can look at the 1-hour ATR. Now it says $50 currently, but normally it's like around 30 on average, even a little bit lower. So sometimes I like to manually adjust it a little bit, but you can use that as a starting reference. Okay, so just a heads up on that. So we can go long here if this happens. Now another opportunity to go short would be, let's say price gets rejected here, comes back up, gets rejected again. Well, you could enter short on that second rejection down, right? We know that, okay, buyers completely ran out of steam. We're probably going to see some kind of retracement back into this level in here somewhere. You could even do a Fibonacci retracement like this, and you could target that 50% retracement level, right, for a nice setup. And then for your stop loss, you could go somewhere above this zone here, right? Like a 25, something like that. This isn't great because it's a 1 to 1.5. So actually in this situation, because the recent market structure doesn't favor a short as much as a long, just because the long has so much upside potential, and I feel like there's a lot of potential support on the short. Trailing your stop loss here could be the most effective way, because we know once gold starts to trend and move, it can move hard. So you could take an attempt here. As soon as you're at the 50% retracement, move your stop loss to break even, and then just ride it down as long as it will go, and just follow the price by like $20 stop loss or something like that. So that's a nice way to play a swing trade setup on gold here. Okay, so that's what I'm looking for to come into the week on gold. Just those two outcomes. There's not much else that's too relevant here, except for one more thing I will mark out, which is the anchored VWAP a tool on TradingView, you can find it right here on the sidebar, anchored VWAP. Now you can mark the all-time high on the, oops, I'll go back to the 4-hour. Mark the all-time high here with the anchored VWAP, and let's just see where it's sitting. So there's another potential major support zone right there. So that's another thing that you could target for your TP if price gets rejected, right? And that's sitting around 33.20. So we can expect that 33.20 is going to be a very relevant price point. Obviously, you can see price sometimes just whips right through it, but the anchored VWAP is always relevant. Like back here, we can see that it's very relevant. And this is such a random price point, you would think, until you mark out the all-time high anchored VWAP, and now you can see why there was a mean reversion right off that level. Okay, so it's just always something to be aware of. All right, let's stop rambling about gold. Let's go on to EURUSD. So we looked at EURUSD last week, and it's been pumping. And let's look at the edge finder data just to start. EURUSD, and we can see that it's still technically bullish. It's at a 5, but if we go to the top history setup here, so this is just the scores over the last month, day by day. Oops, I have to go here actually. Right there. Let that load up. Okay, so we can see that, you know, price was so strong at some point. It was a 10 at the end of June, and now it's kind of been losing a little bit of steam in terms of economic scoring. We were at a 6, and now we're at a 5. So that's something to be aware of, and that's probably why we're seeing some sell-off here on the 4-hour over the last week or so. But that's not to say it's not an asset worth buying. It's just kind of nice that, okay, well, if price keeps pulling back, then maybe there's going to be an opportunity to enter in long with all of these buyers, because you can see here we are still extremely bullish, right? Extremely bullish. I mean, look at the slope of this trend right here. It's like, it's strong, right? And I don't trade trend lines, but like, as you can see, price is coming right into that trend line right now. So if you like trend lines, maybe take a look at that for yourself. I'm not going to, because I don't trade them, so that's okay. What I like to do here in this situation is that, as I did last week, this previous run up we had, I'll take a Fibonacci level and I will run it from the low to the high. And all the Fibonacci, guys, does is it marks out the retracement percentages of the previous last strong move, if you mark it out like this. So the 50 Fibonacci level, all it is a 50% sell-off of the last strong move. It's a very simple concept, and that's why I really like it. Let's just make this a bit bigger. So what I was looking at here in this level is I was looking at the level between the 382 and the 50, because this is generally a reversal price point, a reversal zone, I would say, where price will come in there and it will reverse. Okay, so this is one level that we're really close to right now that would be interesting going long at. This would be my first shot at a long. So if the week opens and price whips down into this zone and starts to get rejected, then I'm going to be looking for a long here, like so. And I can target the all-time high, or I can trail it again. And for my stop loss, I would just go somewhere below that 50, like around 30 pip stop loss, which I think 30 pips is around the day trading ATR level that I had spoken about before. That would be perfect. And then look, you get like almost a 5-to-1 risk to reward on this setup, which is very, very rewarding if it hits, right? So that's one scenario. The other scenario I really like, and it's another key level I marked out last week, which I'm really watching close. It's this level right here, right on this 618 retracement. This is a beautiful level right here. So I'm just gonna make that a bit skinnier in there somewhere, because that's a 618, and we also had a major reaction to that price point last week, and it's around 1.16. Okay, so the second outcome, if I have 2 bullets in the chamber that I'm attempting, 2 longs, if this one fails, let's say I set up this trade and it starts to get rejected, comes back down, and it just smashes my stop loss. Okay, that's okay, because I'm going to set up another attempt. If it comes back down here, I'm going to set up another attempt, right? As soon as it comes down into that zone, it gets rejected, I go long, target those recent highs again, set my stop loss to around a 30 pip stop loss or so, And now my risk to reward is a potential 1 to 7. Okay. So if I'm risking 1% on each of these trades, if they both don't work out, that's 2% loss. But if one of them works out, that's going to be between a 5 and a 7% return. Okay. Or I guess it would be between a 5 and a 6% return, because we would lose first 1% on the first trade. So that's kind of how you can use these situations to set yourself up for potentially really high return, even if you lose the first trade, right? So that's my idea on EURUSD right there. Okay, so let us move on to the last asset, the SPX 500. Okay, I'll just clear this here, open that up. Okay, so last week we looked at this as well, and it was running up pretty hard last week. I think we ended off like right here or something. And now it looks like price has been consolidating, right? That's a consolidation in my opinion. And in this situation, we just kind of have to see, well, what's going to happen? Is this because buyers are running out of steam? There's a little bit of fear in the market. People are unsure. Has it pumped so hard in the last week or 2 weeks that it's ready for a retracement? Potentially, right? So the important thing here to do again is just to wait. You activate that if and then mentality. And the first thing I'm going to look at here is I'm also going to draw the Fib retracement. Just because we're in all-time highs, there's really nothing else we can do. There's nothing to the left here where we can go off structure. We're floating in outer space, right? So Fibonacci retracements can be great for that scenario as well. So it's consolidating here. And what I want to see is I want to see a retracement to this zone here between the 382 and the 50. I'm going to mark up that golden zone again, because that is the highest, most popular retracement and reversal zone of all the Fibonacci levels. Okay, so this is what I'm looking for right here. So I'd like to see price come down into there, and maybe it won't happen. Maybe price is just going to continue to the moon. And unfortunately, you know, as a swing trader, we have to wait for high value entry opportunities, right? So if this thing is just going to pump, then it's going to leave us behind, because you don't want to go long here just for the sake of going long. That doesn't make any sense. We've already pumped. Why would you go long when it has a potential for a retracement, right? The only other thing you could do if you want to get aggressive is you could wait for a breakout of this range like this, and then you could go long off the retest of that breakout. Now that's okay, but the only reason I don't like that is because it is just so incredibly pumped right now. So that, in my opinion, that can be a bit riskier, especially with like the unpredictability of, you know, Trump's tweets and the tariffs and everything. I think it's safer to get a discounted price rather than trying to enter in at a new all-time high. Okay, so that's just my opinion, but that's something you can consider for yourself if you like. So this is exactly what I would do if price came down into this zone right here and gets rejected. Then I'm going to go long. It's going to look a little something like this. And the beautiful thing about trading retracements is you can always just target the recent high by default, right? And then you can always use one of these Fibonacci levels, like the 50 here, right, as a defense for your stop loss. So you could go like right there. Now let's just take a quick look at like the 4-hour ATR here, just to see what type of range that is, because the 4-hour ATR or the daily ATR. So here's a quick tip if you're listening. For the ATR on a swing trade setup, the 4-hour, I prefer to go on the higher end of the average. So you could zoom out and then take your line and kind of hover it on the higher average, which would be around 30 to 35, right? And then if you go to the daily, I like to go on the lower average, and the daily is going to be higher naturally. So it'll be less aggressive of a stop loss. So if you want to do daily, that's more of a less of aggressive position that you're setting up. But with that being said, then you might be holding the trade for a long time. So I feel like the higher end of the 4-hour average is a nice happy medium to choose for a stop loss. But once again, you always want to take into context the previous structure and having some kind of defense for your stop loss. And that defense for me here is the 50 fib level, right? That's my defense. So if it breaks through that 50, it's going to hit my stop loss. That's okay. I want out of the trade anyway, because who knows where it's going after that. It could go all the way back down to here. It could go all the way back down to there, which would be crazy, but it could happen. So this is exactly the setup that I like, because there's a little bit of defense, and the potential again is like almost a 4-to-1, or it could even be better if it came back up and broke the all-time high. You could trail it, and you could just stay on the train until it pulls back enough until it knocks you out. And if you're going to trail the stop, just trail it by the amount of stop loss that you initially used, which would be about 40 pips, right? And this thing could easily keep running, because there's probably not even 140 pip pullback on this whole move. Maybe here is the only one. So you can really catch these clean moves if you do trailing stop losses on swing trading. All right. So yeah, that's my analysis for the week, guys. I hope that's helpful. Once again, I will have a lot of information, a lot of different scenarios that we look at in my live Discord. So make sure you get in there. I'll leave my Discord link in the description. I post swing trade setups there for everyone to see, VIP members and normal community members. So you can get in there and check that out. But yeah, appreciate you stopping by, and I will talk to you next week. Peace.